Long-term care in retirement, and something that many people sometimes choose to overlook or even forget. My guest is structured settlement expert John Derer. John, it's good to have you back here on the Legal Broadcast Network. We're talking today because you've recently had an experience, related to long-term care with your father.
Well, Scott, back in 1999, I had a discussion with my parents about the subject of long-term care. And this is something that I think is really important for other children to have with their parents. But we discussed long-term care and how it was going to be financed. And as a result of that discussion, a decision was made to purchase long-term care. Both I and my siblings paid for the cost of that coverage for a period of time. And 5 years after the insurance was purchased, my dad was diagnosed with Alzheimer's. And 9 years after that, my dad entered an assisted living facility. Now, for many people, the cost of an assisted living facility is prohibitive and possibly financial devastating. The assisted living facility that my dad was at was the best in Connecticut. It cost upwards of $250 a day. However, because that we had had the foresight to do long-term care planning, to have that discussion, not be afraid to talk about the subject, we had our initial meeting with the assisted living facility, with their financial people, and I was able to pull out the insurance policy, get the insurance company on the phone, and verify the coverage and assign benefits, and as a result, a lot of financial fears were dissipated. And instead, the focus moved from how are we going to pay for this to how to best supervise my father's care.
John, you've talked about long-term care insurance as can be a loving gift from a child, and it's also something that you refer to as retirement insurance. Can you explain?
Well, in my case, it was a loving gift to both my parents. I also own long-term care insurance myself, and I bought long-term care insurance about 14 years ago, about the same time that I bought the coverage from my parents. The reason why I bought it for myself is twofold. Number one, I happen to be in a business where I see people who are catastrophically injured in auto accidents and other types of situations. And just because you're in an auto accident doesn't necessarily mean that the person who hit you or is responsible for that accident and is liable for damages to you has a appropriate amount of liability coverage. In fact, many situations I've seen in places like Kentucky and some of the rural areas in other states, we see coverages where there's a $25,000 policy limit or even a $100,000 policy limit. And if you're a paraplegic or a quadriplegic, or you've got traumatic brain injury, that's after the attorney fees are paid, that's barely enough, and you're basically stuck with Medicaid. So I decided that for myself, if something like that happened to me, that I wanted to have a resource that wouldn't drain my savings, and so I purchased long-term care insurance for myself. I purchased it for that reason. I also had an eye to the future, which is where retirement insurance comes in. When you think about it, people who are in their 30s or 40s, busy with their careers, growing their families, raising their families, and all the attendant expenses that go along with that. It's easy to take your eye off the ball in the future, but the future could be here before you know it. And when you think about it, if you are somebody that is contributing a substantial amount of money to a 401k or a profit-sharing plan, the limits on profit-sharing plan contributions could be as high as $50-some-odd thousand a year. Now, if you could take 10% of that and put it into a long-term care plan, and there's a variety of long-term care solutions out there, not just a long-term care policy, and I'm going to talk about that shortly. But by planning now, it will cost you less later, and you will be able to safeguard against changes in your medical condition, which could prohibit you from getting coverage in the future or make the cost prohibitive because you waited.
I think with retirement planners, the prevailing thought has been that one should start thinking about long-term care insurance at the age of 60, but you think that's too late.
Right. Waiting till you're 60 is not the right thing to do, in my opinion. I bought my coverage when I was 38. My first monthly premium, and I've got, Cadillac type plan, cost me only $83 a month. And of course, there have been rate increases since then. But my cost is a fraction of what the cost that other friends of mine who waited to buy their coverage in their 40s. And if you wait till your 60s, the cost factor comes into play, and you may have a gap between what you can afford, what benefits can be purchased based on what you can afford, and so there's going to be gaps, and your choices are going to be reduced. The idea is to give yourself the most choices, but that requires the ability to plan ahead. And I mean, when I say plan ahead, not plan ahead 1 or 2 years, but really think, 10 or 20 years down the road, just like you would if you're thinking about, well, I ought to put away some money for retirement, put away some money for long-term care. If you have not addressed long-term care, your choices, should you become frail for whatever reason, are going to be limited. You might only have the option to go with Medicaid and all the restrictions, and Medicaid only covers typically skilled nursing care in a nursing home setting, so forget about assisted living and other types of solutions that give you dignity. I can tell you that as sad as it was to lose my father in November of 2013, I can look back on the close to 3 years that he was in an assisted living facility and seeing him smile, seeing him dancing and singing, and enjoying the companionships of others with similar afflictions, and feeling a sense of purpose that someone who is developing cognitive deficits may not feel.
My guest has been structured settlement expert John Derer. I'm Scott Drake, and you're watching the Legal Broadcast Network.